Let's welcome on board Deepak Shenoy as well. Deepak, hi, good to be speaking with you. Today it seems like it's IT which is doing a bit of a heavy lifting, whether it's LTI Mindtree, whether it's Infosys, TCS, they're all powering ahead. Would you venture a bet into the IT space yet ahead of the earnings season or not just yet? I think you'll have to unmute yourself, Deepak. Okay, no, I think there is some audio show still with him, but nonetheless, let me try and go across to Naresh to get a sense on the IT stocks. Would you be a buyer?
So it looks like a good recovery across the board. So Infi, for example, has finally taken out a resistance around that 1550 mark, has upside towards 1650. Stocks like LTI Mindtree, good enough recovery, a strong case for further moves. TCS is the most interesting one because that is consolidated around this 3800 mark for a long time. Sustaining 3920 indicates a possibility of 4100 also. So looks like a trade, but I would keep a very strict stop loss of say 1 to 2% from current prices and look for a 5% move.
Deepak, can you hear us now?
Now I can. Can you hear me now?
Yes, we can hear you, Deepak. Good to be speaking. First of all, congrats. Your assets under management heard that crossed 2,000 crore.
Thank you so much. We're really small, so I know that's
I remember
a big thing for
when
us.
we first met, I think you were barely managing 100 crore.
It's
around
been a slow ride, but enjoyable for us.
Bulk of the money coming in the last 1 or 2 years, as it always does. Good big money actually comes when markets looks very hot, and they are hot right now.
They are, to be fair, most of the money I think has happened because of growth of the portfolios. The big money actually started coming in 2020, 2021 when markets were starting to explode. But I guess now what happened is more you get more broader exposure. A lot of mutual funds also getting money, so we are a smaller part of that.
Smaller, nonetheless, an important part of the entire ecosystem. But Deepak, just wanted to get your views on the IT sector that we are trying to get the conversation going with. What's the view?
So I think we will wait for results. Basically, because the problem right now that you're seeing in the IT sector is that you're not really sure of the spends that are happening abroad, and a lot of places you're having issues, specifically in Japan and in Europe. You're having a different, more recessionary impulse there. America, you're having a different situation where spending is actually slowed down quite a bit, and then they're not actually giving you big deals. So even the IT companies in their last commentary said, listen, we're going to have to wait to see how things are. I think with especially the US, you might see more activity after US elections because, depending on which candidate comes, there will be a different regime for either outsourcing or visas. And based on that, I think a lot of more decisions will happen. I would say at this point, wait. I think markets will react as they are. The markets will just be markets, and throw volatility at you just to excite you all the time. But I think at some point we got to wait to get some reaction from the companies and see some numbers in the results.
Deepak, what has been your activity, if you could share, in the last 2 months? Have you been trimming any positions, reallocating back to some new names, or at least themes which you wanted to add and now looking good, convincing?
So we've actually moved away from a few, maybe very, very little stocks that we've kind of trimmed positions in. Perhaps at some level, we've been actually adding on to our manufacturing positions. So so if you look at the manufacturing space, I mean, manufacturing is a wide swath, but so whether it's auto ancillaries, companies in the high precision manufacturing and engineering spaces, companies in defense that are providing equipment to defense, and companies in the transformer spaces. I think this is where multiple of our themes kind of meet together. I think there's a lot more activity that's going to come here. We haven't meaningfully trimmed positions, but then since I don't have too much cash, I have only incrementally added to positions whenever dividends, for instance, come in and so on. Overall, I still remain mostly invested. We're about 99% invested, so very little cash. We've retained that over the last 2 months, mostly because honestly, I didn't know what the result of so I don't know how to predict what will happen to a market when elections or even the budget changes. So I would rather be fully invested because I don't see a near-term negative trigger from the fundamentals. I believe going forward, we'll get some indications from company results and from the budget about what sectors might actually end up being more attractive. I expect to be able to add those positions afterwards or change any of my current positions then.
Okay, fair enough. So that's the view coming in. Just wait and get the management commentaries going. In the meantime, let's just pull up Swan Energy. That stock might be reacting because the company has managed to prepay 300 odd crores. So let's see if it is reacting. But apart from that, Swan Energy is the name that I'm talking about because that managed to actually prepay some of the names. So no, actually there's a slight bit of perk up, but not really. Let me take it across to Ansh now to get a sense as to which are the big price volume buzzes right now. Ansh, it's the day of expiry. I'm guessing you are quite busy looking at the kind of volatility we have for the last 1.5 hours.
Yes, and actually Reliance will be the first stock in focus as that's the top mover, one of the top mover of Nifty actually. The stock has given a breakout from its reverse head and shoulder chart pattern, which was intact from last 4 months, and the breakout has come from that 3020 mark. So unless we don't go back below this level, the stock looks very positive. Also, the stock has touched record high level today. Apart from this, Manappuram Finance will also be in focus as the stock has given a breakout from its horizontal resistance zone, which was also has been intact from last 4 months, and the breakout is happened from 200 level. Also, the stock has touched 2-year high level, and the breakout is backed by heavy volume of over 5 times its average trading volume of last 10 sessions, indicating very strong participation in today's breakout. LTI Mindtree will also be in focus as the stock has given a breakout from its 4-session consolidation pattern, touching 3-month high with volume of over 2 times its average session of last 10 sessions. Wipro will also be in focus as the stock has given a breakout from its Wipro will also be in focus as the stock has given a breakout from its almost 4 to 6 sessions consolidation pattern, touching 3-month high level with volume of over 2 times its 10-session average volume. Also, the high potential of Hindustan Copper getting into ban list for tomorrow. So keep an eye on the stocks.
Just 15 minutes to go. Let's get in some BTST trades going. Nuresh, what are your BTST trades?
So first would be a buy on Manappuram Finance, the stock hitting almost a 5-6 year high, very close to it. Stop loss at 207, target price of 220. Second is a buy on IGL, which has been struggling around that 480 mark. Looks like a breakout in the making above 485. Stop loss at 475, target price of 500.
Kunal, what about you?
I'll go with a buy on Siemens. I think that's a chart which is looking attractive. Targets of 7,900. Stop loss could be kept at 7,600. And Jubilant Pharmova is something which has also started to get back into a recovery mode. So formation of a bullish flag pattern on the daily charts. Buy with a target of 775. Stop loss at 730.
So those are the top recommendations coming in, but hold that thought, gentlemen. My colleague Sharad is now joining us to talk to us about the dealing room chatter right now. Sharad.
Well, yes, in focus is GAIL, and the dealing room buzz is that DI selling is coming in from certain mutual fund houses. Now, interestingly, 4.8 lakh shares have also exchanged hands in the day's trade as well. And the key DIs already invested in the company includes the names such as SBI Mutual Fund and Kotak Mutual Fund. Now, the DI is holding the entire stake in the company in the mutual fund segment, if you look at it, is roughly 10.3% for the March quarter itself, and is expected to come down. And even interestingly, Quant Mutual Fund completely exited the stock in the month of May as well. Now, also analysts are suggesting that there are certain near-term pressures as well for the company, and the first one being is the higher gas prices, which is also followed by a negative petrochem spread coming in. So what we are gathering from dealers is selling is coming from certain mutual fund houses when it comes to GAIL.
That's the view coming in on GAIL. But Deepak, I want to quickly talk about these gold financiers. Now, we all know that for a certain section of society, working capital means pawning the gold, right? And the easy availability of credit, etc. And it has been doing well for such a long time that even new players, even banks want to enter, new players want to enter and scale up, but it comes at a risk. Some of the companies like Manappuram and Uttur have mastered their risk management in this specialized niche. Are they? I mean, they've gone through their, kind of rub with regulator and sorted their issues. But some of these big, good companies come back. Look at how Manappuram came back. What are your thoughts? Do you have any of them in your portfolio? As a lender, in the entire lenders sphere, how do you see these gold financiers?
So there is actually a very good reason. I mean, these are more like cyclical, so they keep moving, between downs and ups. And I think recently there's been an upturn, and I think for Muthoot and Manappuram, part of it has come because one of the larger holders, which is IFL of the gold financing platforms in NBFCs, has seen some kind of RBI action and therefore a slowdown in its gold lending portfolio. And these players are able to get some of that slack on their books. Banks have also seem to have slowed down a little bit of their portfolio, because the way the system works is that you need fairly quick turnaround on gold loans. You need customers come to the bank. They sometimes come from really far away places, pawn their gold. For a bank, they have to get an assayer, a machine that figures out the purity of that gold, and figures out what it can price it at. Muthoot and Manappuram have got assayers in almost every branch, and therefore they're very able to quickly turn around the loan. Most banks, especially public sector, they share assayers between multiple branches. So therefore, sometimes you have to wait a day. Sometimes people have to come to the bank and then they wait the whole day and then go back without getting the loan because there was no person to assess the purity. So therefore, these players tend to get because their loan rates are much higher than public sector banks, and yet they're able to grow their business. So at times when people do need it, and the availability of unsecured loans has fallen because of RBI pressure on both banks and NBFCs to reduce that part of their portfolio, gold is seems to be now slowly getting to be a beneficiary. I don't have the numbers yet because this quarter numbers will come only a little bit later. But we'll have to see. I think gold lending will increase in terms of size, both across banks and NBFCs. And Muthoot and Manappuram probably will take the bulk of the NBFC part of the lending game.
The view coming in on some of the gold financiers, Manappuram clearly having a field day today with that 7% gain. But not just that, in the last few minutes, there has been an up move on the likes of JK Paper, a Concord Biotech, an Avenue Supermarts, a Thermax, a Tata Power. These are some of the names which are actually getting fired up in the last few minutes of the trading session. Just 10 minutes left. And of course, on the day of expiry, we are seeing a bit of volatility with the Nifty being above the mark of 24,000. In fact, we're at the highest point of the trading session right now, very close to 24,100, and bulk of that rally in the last few minutes. Let's see where it's coming in from, because I think it's IT yet again, which is actually doing quite well. You have Infosys as one of your top gainers. Reliance has also done quite well, and TCS, Ultratech Cement, NTPC are some of your other big gainers right now. But talking about L&T and LTI Mindtree, these were some of the stocks that we were tracking as well. L&T is down 1% in the trading session, but we did get an exclusive chat going with SNS, the head there at L&T. Listen into what he had to tell us, because he was saying that there is some challenge when it comes to the labor issues right now, but they're quite constructive on the overall economy and the kind of order inflows that they're expecting. Listen in.
I've been in this, may not have been the chairman, but I've been the managing director and CEO for the last, from 16, 17, right? So it's nearly 7 years now. So what I need to do and what I don't need to do has already been existing in the company. There's a title change because Mr. Naik, known circumstances, has decided to move out of the roles within L&T. Of course, he continues as a chairman emeritus. Therefore, this position for me is more a regularization of what has been happening. So what Mr. Naik said is right. Whatever we need to do, we have been doing. It's a continuous process, not that just because you've gotten the leadership, now I have to do 10 things less and 10 things more. That's not the way it works in L&T. It's been a very gradual process of succession. It's been a what you call planned and executed succession. We've had a great relationship, highest respects for him. He's been a Bhishma Pita. And as I said, some people are always your chairman, and he's that. And we'll continue to take it forward from where he has given it to us, and the platform will continue to grow.
So under your leadership, we'll see some more diversifications?
It's a boring company. Okay. I don't see anything that is radical from where it is right now. We have a great platform. We have many things to do. We are in quite a few verticals. And the principal job would be to push these verticals, to take them forward for growth and shareholder value creation. That would be the principal objective. Yes, any learning, growing organization will always look at businesses to come out of because it's got commoditized or we don't want to be in that business. And we'll always look at new areas to replace them because any good organization has to keep looking out for opportunities and appropriate spaces which suits us. So that will be the endeavor. There's nothing specific that I plan to do right now.
Great. Deepak, before we thank you, just a quick word on Tata Motors. I mean, one of the commentaries coming last evening was that they're aiming at a 15% kind of a margin profile by 28. 15%, they're talking about 50,000 crore of profits at a 3.5 lakh crore MCAP. Yes, it is FY28. It could be 2 years away. But does it make it okay at 980 bucks as well on valuation front?
Well, interesting. I don't know if they will do it. I haven't seen this news to be honest, but I think 50,000 crores in profits would be fantastic for this for the company. But I guess when they say margins, they'll probably mean operating but not net. So technically, it'd be a lot lesser. And plus, 28 is still 4 years away, so we're still 24. So I like to look at it as more like. Let it happen when it happens, because Tata Motors in the past has actually had a lot of surprises. So if you look at its past results, every result every year, they've had some kind of a one-timer that dampens their results. So when you have a one-timer every year, then you know that there's going to be a surprise sometime in the future. So I'd like to see them run a few years without having these one-timers. And they've done it last year, so I don't think it's out of the ordinary. But I would just take this with a pinch of salt and say let it happen, and then we'll see the trajectory going there. But this is a surprise to me, so I don't know on what basis this has been said. So maybe there's something else happening there.
Sure. No, as they say, the only thing sustainable, at least for Tata Motors for now, has been those one-offs. Let's see when that thing goes away. But Deepak, before we let you go, one of the big events for tomorrow is, of course, the bond inclusion. You also have the, Bank of Baroda annual general meeting, Kim's too, perhaps some stock splits, Stanley Lifestyle IPO on the bourses, and then, of course, we're waiting for the PCE data from the US. But talking about the bond inclusion specifically, and especially because you track the space closely, what's your view on it? What kind of inflows one should prepare for, and what would it do to the system liquidity?
Already come in for the most part, because people usually do plan this in advance. They set up their deals so that there's no surprise when there is an actual event happening. So you saw the bond yields fall a few days back to 6.97, 6.96% even. Now they're back up to 6.99 on the new 10-year. I expect that to be the primary beneficiary of it. So at best, maybe a basis point or two, but I don't think it'll fall substantially more than that. Probably $1 or $2 billion will come in or has come in anticipation of this. I don't expect this to move markets meaningfully this month, but going forward, since we're going to have flows almost every month going forward from now to 2025, this does provide a lower cushion to bond yield. So I don't think they're going to rise too much unless inflation throws in a major surprise or the budget throws in a major deficit surprise. Once we've passed that, I think we should see bond yields fall further. I think hopefully a rate cut as well towards the end of the year. We will only cut when the US cuts rates. So that will provide the next set of moves, because once you have rate cuts, your bond price will probably have a higher weight in the overall index as well. That will feed in more capital into Indian bonds. I expect some of the beneficiaries here to actually be some of the public sector banks and some of the private sector banks that are issuing bonds worldwide, where their cost of capital will come down because the demand for government bonds has increased. So therefore, they get a little bit of a spillover. It's very positive for India overall, and we've just thrown a current account surplus. It's great.
Mr. Deepak Shenoy, Naresh, as well as Kunal, thanks so much for joining us on the show.
If you like this video, then like, share and subscribe to ET Now.